Hi you guys, welcome back to the show. My name is Brad. This is the Firefighters Investing channel. If you're new to the channel, give me a like, subscribe to the channel. It really helps me out. Today I'm going to give my advice to young people, the best advice I can give you for investing. Now, I'm not going to tell you what stock to pick. I'm not going to even tell you what to invest in. I'm going to give you the generic, what you need to know about investing. Okay, young people, listen to me. First thing, start early. Now, I can tell you personally, I didn't do this, and I'm paying for it now. Start as young as you can. Start at 20, start at 18 if you have some extra money. The best thing you can do is start right now. Because the earlier you start, the more time your money will compound, the more money you will have when you're old. Okay. How do you do that? You concentrate on your savings rate. Now, I realize saving money when you're young and you're not making very much money is hard. I get it. I was there. I remember when we could barely afford to pay our rent when we were 22 and 23. I get it. It's hard. So how can you do that? You can concentrate on maybe doing a side hustle, trying to get extra hours at your job, whatever you can to make more money so you'll have more money that you can put away to invest. Next thing you need to do is consistently invest. It's just like going to the gym, you guys. If you go to the gym for a week and then you stop, you can't expect yourself to be in great shape, right? You have to consistently keep going. And investing is the same way. If you put in some money, do it consistently. Start early, consistently put away. Have it taken out of your check. Have an automatic withdrawal from your bank account, your checking account, to your Roth IRA once a month. It doesn't have to be a big amount. Maybe all you have is $50 a month, right? Put it on autopilot. You don't have to think about it. It's going to make it easier for you. Now let's talk about time in the market and timing the market. Okay. We all know we want to buy low and sell high. But here's the thing. Okay, everybody says it's too high, it's too high, I'm going to wait for it to drop. Here's the thing, nobody knows when it's going to drop. The best time to invest was yesterday. Now the best time is today. Put your money in, time in the market. On average, the American stock market makes 7 to 10% annually. Now, it doesn't make that every year. It's because people have it in there for long time periods. Time in the market. There are no periods in the United States stock market history where in any 20-year period you had losses. Now, in those shorter periods there were losses because the stock market goes up and down. We know that. Think long term. Okay? Time in the market, not timing the market. Don't try to buy the lows and sell it when it's high. Just leave it alone. It's easier. Remember one thing, there's always risk. The stock market, we talked about that a little bit, there's always risk in the stock market. Now, just because it's averaged over history 7 to 10% returns doesn't mean that's going to happen in the future. In fact, in the short term, we've seen a lot of volatility lately, even in the last couple of years. For example, this year the S&P 500 is up 15%. But if you look at it from 1 year ago to now, it's only up about 1.5%. Because we had that big drop at the end of 2018. So we know it goes up and down. We know we could lose it. Even safe bets, like putting your money in a savings account. Let's say you have an online savings account at 2%. You're still at risk of losing money to inflation. What if inflation goes up 3%? Now our money's already lost 1%. There's always risk. Okay, so how do we mitigate the risk? We keep investing and we keep focused. Also, we do not invest in things we don't understand in. We don't understand. I don't understand how Bitcoin works, so I don't invest in it. Now, I understand not everybody understands all the inner workings of the stock market. That's different. You know that when you buy stock, you're buying a little portion of that company. When you buy an index fund, you're buying a little portion of lots of companies. Right? You're buying in as a fractional owner of that company, so as they make money, you make money. Now, we know there's risk, right? But if somebody comes to you and says, hey, you should do options trading, I don't even know what that means, so I don't invest in it. If you don't understand it, stay away from it. Okay, on this channel, you guys know we're buy and hold investors. We think long term. Now, we talked about how over the long term, the stock market has always gone up historically. The longer you hold it, the better chance you have of making money. Now, does that mean in 6 months you're going to have more money? Maybe, but you might be down. The stock market goes up and down, and if you look at your account statement at one particular moment in time, it could very well have lost money. Now, this brings us to my last point. It's not an emotional thing. Buying stocks is unemotional. Do you think when Warren Buffett loses $1,000 on a stock, he gets all worried and sells it? No, he knows that happens. He takes the emotion out of it. If it's hard for you and you do get emotional by looking at your statements, don't look at your statements. Just keep investing. Check them once a year. Check them once a year and decide if you need to rebalance. Think of it this way. We're not worried about what my account's going to be doing in 6 months. We're not worried about what it's going to be doing in 3 years. We want to know what it's going to be doing in 20 years because we're thinking long term. We invest long term. We think long term. By doing that, we know there's going to be some bumps in the road. We know it's going to go up and down, but we know if we leave it in there, it's more than likely going to make us money. And the longer we have the money in the market, the more chance we have for compounding to make us that money. All right, you guys, I hope you got something out of this. If you have any questions or you think I missed something, let me know. Give me a thumbs up, subscribe to the channel, leave the comments you have. Tell me what you think.